Welcome to today's webinar, Looking Forward Using a Proven ETF Rating to Build Better Client Portfolios, presented by Marc Chaikin of Chaikin Analytics. My name is Bob Upshur. I'm the founder and CEO of Advisor Perspectives, and I will be your host for today's webinar. As ETFs grow in number and complexity, it's becoming more difficult and time-consuming for advisors to find the right ones. Discover how to build better ETF-based portfolios using a uniquely forward-looking rating system that helps you easily determine the best ETFs for your clients. In this webinar, Marc Chaikin, the founder of Chaikin Analytics and creator of Chaikin Money Flow, will walk through cutting-edge technology that helps advisors make better investment decisions, accelerates the research process, enhances client engagement, and frees up time to grow your AUM. Marc is the founder of Chaikin. After 40 years on Wall Street as a trader, stockbroker, analyst, and head of the options department for a major brokerage firm, Marc founded Chaikin Analytics to deliver proven stock analytics to investors and traders based on the Chaikin Power Gauge, a 20-factor alpha model proven effective at identifying a stock's potential. Marc developed computerized stock selection models and technical indicators that have become industry standards, including Chaikin Money Flow, and pioneered the first real-time analytics workstation for portfolio managers and stock traders. We're going to begin with a quick polling question that'll be on your screen momentarily, and I'm going to read that to you. What holds you back from using ETFs in constructing client portfolios? Nothing. I'm all in with ETFs. I'm worried about the lack of liquidity. The fees and expenses are too high. I prefer actively managed mutual funds. Or lastly, I don't have the proper tools or research sources to analyze them. While you're answering that, let me mention that this presentation is approved for financial professionals only. The CFP board has accepted this program for 1 hour of CE credit towards the CFP certification. In addition, the Investment and Wealth Institute has approved this program for 1 hour of CE credits for those with the CIMA, CIMC, CPWA, and RMA designations. If you provided your CFP ID or your Investment and Wealth Institute ID during the webinar registration process and stay on for the entire live session, we will report your attendance to those organizations. Both organizations typically take 2 weeks and sometimes longer to issue CE credits, so please be patient if your credits do not appear sooner than that. All right, let's take a look at the results of our poll. And 64% of our audience is all in with ETFs, but it looks like the biggest reason that holds people back is they don't have the proper tools or research to analyze them. That's 14.5%. 13.7% say they prefer actively managed funds. 6.8% say they're worried about lack of liquidity, and only slightly less than 1% are worried about the fees. All right, today's webinar will consist of approximately 40 minutes of presentation by Marc. We will then open it up to questions. We'd love to hear from you during today's presentation. To submit a question, please use the Q&A box on your webinar console. Additionally, our webinar console has a number of tabs at the bottom of the screen to help you enjoy today's event, which I will review from left to right. First, there is a media player tab to control your volume. Then you have the slide tab, which you can use to resize to fill the screen. Next is the Q&A tab, followed by a resources tab, where you can find a PDF of today's presentation as well as information from Chaikin Analytics. After that is a tab for more information on our speakers. And lastly, there's a button that reads Schedule a Call. Use this to schedule a follow-up call with the folks from Chaikin Analytics to learn more about its solution or to ask more detailed questions about this presentation. A recorded version of this webinar will be available on the Advisor Perspectives webinars page after the event. Also, if you encounter a problem with the audio or if it appears that the slide deck is not advancing, please refresh your browser. That typically resolves the problem. If you have any other technical problems, please use the Dialog tab on your webinar console. And with that, I turn it over to Marc to begin.
Thank you, Bob, and welcome everybody. Let's go back to the cover slide. Appreciate your taking time out of your day to join us. In this afternoon's webinar, we're going to share with you how advisors like yourself are using the PortfolioWise platform, which consists of a suite of ETF and portfolio analytics to basically manage their practice, to have better client engagement. And in a sense, what you're going to see, and I really like you to think of it this way, are a suite of tools that are both customer retention tools and customer acquisition tools. A little bit of my background: 50 years on Wall Street. I just added 10 to Bob's number. And for 45 years, I've been using technical analysis. Very early on, when I was we called them stockbrokers back when I started, I realized that to protect client assets and keep my sanity in the periodic bear markets, that I needed something more than just fundamental research. Always believe that fundamentals drove the market, and you'll see that is a thread that runs through everything we do at PortfolioWise, but that combining fundamentals with technicals was really important. When I sold with my partner our institutional brokerage firm, Bomar Securities, to Instinet, the electronic trading arm of Reuters, in 1992, I started a quantitative research department at Instinet. One of the people I hired, gave his first job to, was Russ Kosterek, who is now one of the chief strategists at BlackRock. And we designed quantitative models for Instinet's 2,200 institutional clients. 6-person team. It enabled me to advance my quantitative skills. And along the way, I was mentored by some of the smartest and most successful institutional investors, like Peter Lynch at Fidelity, the people at T. Rowe Price, people who really understood what institutional investing was all about. And the reason that's important is because when I started Chaikin Analytics in 2010, I drew on everything I had learned from these very successful institutional investors who all had different styles and time horizons, but they had one common thread. They looked at the same information day in and day out. Bill Miller at Legg Mason, one of the premier investors of his time, staging a pretty good comeback right now. They all looked at different factors, but they were consistent in looking at those same factors day in and day out. And so when I created the Chaikin Power Gauge rating, which is really the culmination of my life's work, I drew on a lot of what I learned from our institutional clients, and also from some of my colleagues at firms like Tucker Anthony and Drexel Burnham, where they had one of the first quantitative research departments on Wall Street. And all of that research has been distilled down into quantitative rating for both individual stocks and ETFs. We first rolled out our 20-factor model in 2011. It's been live for 9 years. And roughly 2 years ago, we rolled out our Power Gauge ratings for ETFs, because the feedback we got from our clients, which include both high net worth individuals and advisors, was that ETFs were starting to show up on their radar screen. The obvious tax advantage and the lower cost relative to actively managed mutual funds was on people's mind 2.5 years ago. It's only gotten more so. And one of the problems, as Bob pointed out at the beginning in the poll question, is how do you find the time and zero in on the right analytical tools to manage what is now a 2,200 ETF universe? So the Power Gauge rating combines, as you'll see on the next slide, fundamentals, technicals, earnings, and expert sentiment into a single rating. The display is very simple, but the calculations going on under the surface are very complex. And it gives you a quick, confident read on any stock and now on ETFs. So what's in the power gauge rating? That's really the key to the success that we've experienced since 2011. Well, 85% of the weightings are fundamental factors, with value leading the pack at 35%. So factors that people like Warren Buffett and Seth Klarman use, Bob Arnott at Research Affiliates, Rafi, price to sales and free cash flow to market cap are the two most heavily weighted factors in the model. Growth factors sort of self-explanatory, except for earnings surprise, which is a big short-term driver of stock price movements because it leads analysts to raise and lower their estimates. And we've just now finished up a very strong earnings season where the stocks that reported positive earnings surprises and the home building group and the software group experienced some very, very big upside price movement. Technicals are 15% of the model. They sort of keep it honest by looking at relative price performance and money flow trends. And then the secret sauce in the model are sentiment indicators. We're looking at what some of the most smart investors on Wall Street, the smartest people on Wall Street, are not just saying, but what they're doing. So we're looking at short interest under the theory that the shorts do some really significant research. We look at what the insiders are doing, which is particularly important in small cap stocks. And we look at industry group strength, which I think is an underappreciated factor when evaluating both stocks and ETFs. And research from people like Zacks, Investors Business Daily, and Standard & Poor's white papers that have been published over the years have demonstrated that if you're investing in strong sectors and industry groups and the stocks in those groups, you've got the wind at your back. So the bottom line is we've got a multi-factor model that reflects the various constituencies in the marketplace, from value investors to growth investors to dividend-oriented investors. And the model works because it's based on how Wall Street works. It's plain and simple, and we're going to show you how we took that model and then created an ETF rating that is forward-looking. So my philosophy, which I've basically imbued Chaikin Analytics with and portfolio-wise is powered by Chaikin Analytics, is that fundamentals drive the market, but that emotions drive the market to extremes. And we've certainly seen 2020 be the poster child for that statement. So for me, in 50 years on Wall Street, the path to profits has always been to combine fundamentals and technicals. When we set out to create the ETF power gauge ratings, we faced the daunting task of trying to create a forward-looking rating. You've all heard the disclaimer on any presentation that past performance is not indicative of future performance. Well, we believe that the power gauge ratings, and I'll show you on the next slide what the performance was leading up to launch in our back test, that these have predictive values. They're forward-looking ratings, and you can use them to create better portfolios for your clients. So what we've done with the ETF power ratings is to roll up for all the U.S. equity ETFs, the constituents within the ETF, the holdings in the ETF, roll up their power gauge ratings on both a weighted and an unweighted basis. Because if you're looking at consumer discretionary ETF, the XLY, it's important to know that Amazon has a huge weighting in there. So when we do the roll-ups, we do them both on an equal weighted and a capitalization weighted basis. But then what we do is really unique. We do technical analysis of the ETF itself. So it's important to remember that an ETF is a tradable. It has price, volume, options activity, all the sort of data points that technical analysis is really good at analyzing. And so what we've created is a hybrid rating that is forward-looking. And the rating suggests the potential of an ETF to outperform or underperform the market. Now, we launched the ETF ratings in September of 2018. They're now going on almost 2 years of real-time activity. And the performance in real time has been better than the performance leading up to launch. And these are back-tested results. But the very bullish rated ETFs, about 10% of the total observations in the liquid ETF universe, up 12.2%. And contrast that to the very bearish rated stocks, or even the ETFs, or even the bearish rated ETFs, up only slightly under 2%, slightly more than 7%. If you're focusing on the ETFs that have very bullish ratings, you're going to skew your portfolios with positive alpha. That's the bottom line. So in this afternoon's webinar, we're going to show you how the PortfolioWise platform can help you build better portfolios by zeroing in on the best ETFs for your clients. It's fund family neutral, which I think is really important in this era of best practices for your clients. We're going to show you how to do a top-down analysis by always monitoring the market in a unique way, and also how to improve client communication with easy-to-read reports that can be generated and white labeled within Chaikin Analytics and PortfolioWise particularly. There's an interesting study out of Invesco that was published recently. They basically said that 33% of advisor clients are unhappy. But the reason they're not moving is because they don't have a better alternative. These tools will position you with your clients in a way that make them believe that you're using cutting-edge, objective, third-party research to help construct your portfolios. It also leads to referral business, because clients will refer you if they think you're unique. And that answers the Invesco question about what's the alternative to your current advisor. So we believe that by using these forward-looking tools, that you can be more efficient at running your practice and have better customer acquisition results. I'm going to start off by showing you how you can visualize style, size, sector, and industry group trends using the PortfolioWise dashboard. And then we're going to segue into a top-down approach that uses the elements of the dashboard to spot style and size trends, identify strong sectors, zero in on bullish rated industry groups, and then as a sort of added bonus, which we didn't advertise on the webinar, how to focus on the stocks with the best potential, because we know from the market research and the questionnaires that we've sent out to our clients that approximately 53% of advisors are still building bottom-up stock portfolios, or they're taking their firm's approved list at Morgan Stanley and UBS, and they're massaging it to overweight stocks or underweight stocks if they're discretionary managers, using tools like the Chaikin Power Gauge rating for stocks. So let's start by looking at the Chaikin PortfolioWise dashboard. I've done so many webinars for Chaikin Analytics that I've got to break myself of the Chaikin Analytics sort of mantra, but we are talking about PortfolioWise here. So here's the dashboard. We've got a quick view of the market. We show you what stocks you've recently looked at, so you can click on them and go to our research tab. And then we look at a variety of other ways to slice and dice the information that we think is important to you on a daily basis. So let's start off by looking at another piece of the dashboard, which we're going to zero in on in a minute, our sector rating grid, and then our industry group subsectors, and then industry rankings. And also point out that we've got alerts on the ETFs universe that show you rating changes. We also have stock alerts if you're subscribed to the stock add-on that we're going to talk about at the end of the webinar. And we also have market commentary from our Chief Market Strategist, Dan Russo. Dan writes a daily piece for our subscribers, also has a weekly piece for our PortfolioWise subscribers. Dan is the chairman of the New York chapter of the Chartered Market Technicians Association, and brings a wealth of knowledge on both strategy and technical analysis. So let's zero in on the various pieces on the dashboard. The first one I want to highlight is the style and size power ratings. What we've done here is we've taken the equity ETF universe, the U.S. equity universe, and we've broken it down by the number, percentage of ETFs with bullish power ratings. So this slide was taken about 2 months ago. Growth ratings, 96% of them were bullish. In the growth category, only 37% of the value category was bullish 2 months ago, and blend was 24%. Growth has dropped to about 81% now. Value hasn't gone anywhere. It's actually down to 34%, and blend has moved up into the high 30s. So growth continues to dominate, although clearly we're seeing a little bit of a shift here in the last few days as progress on vaccines and the COVID adoption numbers have dropped. And then we also look at the percentage of stocks by market cap. So large cap, 44% bullish 2 months ago. Mid cap, 77% of mid cap ETFs were bullish. Only 32% of small caps were bullish. So what does this tell us? Well, it tells us that 2 months ago you wanted to be in growth-oriented large cap ETFs. It's that simple. Then in the final panel, we look at the various components of the fixed income market. In fixed income and country funds and specialty ETFs, we're just looking at the technicals, which actually do a really good job of getting you on the right side. So again, 2 months ago, U.S. Treasuries, U.S. corporates had the highest number of funds with bullish power gauge ratings. Municipals were lagging. Now let's zero in on 2 price charts which really highlight what we just saw. The one on the left, the QQQs. On this price chart, we've got relative performance to the SPY. We've got the power gauge rating as a red, green, yellow ribbon. And what we see is that the power gauge rating for the QQQs turned bullish in mid-April and outperforming the market ever since. On the other hand, a very large value ETF, the SPYV, the SP 500 value ETF, has been underperforming the SPY going back all the way to the beginning of the year, and actually had a bearish rating for 2 months in the March, April, May time framework. That's the kind of analysis that you can do quickly and easily in portfolio-wise. The next piece I'd like to focus on is one that I really believe in. It's the SPDR sector grid. We've taken the 11 SPDR sector ETFs and we've put them on a heat map. In the upper right quadrant are the 4 ETFs with bullish ratings: information technology, healthcare, materials, which has come out of the pack recently, and communication services. In the bearish camp, energy and real estate. Been that way pretty much the last 3 to 4 months. It's a way, and you can look back and see what the ratings were 1 month ago, 3 months, 6 months ago, so you can see the progression over time. I believe that sector-weighted portfolios, ETF portfolios, underweighting the bearish sectors, overweighting the bullish sectors, is a way to deliver superior performance to clients. And let's keep going here because we want to cover a lot of ground. I will tell you that there's an advisor at UBS who said, Mark, using portfolio-wise and just underweighting energy and overweighting technology, I was able to outperform for my clients. And that's what this webinar is all about. So then we do industry group ratings. And right at the top, and they're sorted by power gauge, is the XNTK SPDR technology ETF, healthcare, home builders, retail, which is really, again, dominated by internet retailers and semiconductors. So there's a theme here: technology and healthcare. This is what's been leading the market. And what we like to do is go from the strong sector ratings to the strong industry group ratings. And when we see XNTK, we could go with that as a technology ETF, or we could use our screener, which I did here, to filter the large cap technology universe down to just 9 ETFs. I could have stuck with the XNTK, because that's been outperforming the market. Again, since January, it's recently made a new all-time high. And I promised you that we'd show you something that we didn't advertise on the webinar, the ability to drill down into an ETF that's leading the market and see what stocks they own and what the power gauge ratings are. It's a way to find the stocks if you're managing bottom-up stock portfolios or overweighting, underweighting your firm's approved list, to really zero in on the stocks, because where do the best stocks live? They live in ETFs that are outperforming the market. Sort of obvious, but not something that people zero in on. And again, we know advisors who are using this technique and have been for the last 5 years, before there was PortfolioWise, to zero in on the best stocks in the best industry group ETFs. So what PortfolioWise basically enables you to do, and we're going to get into some use cases now, is to differentiate yourself by using unique forward-looking ETF ratings to make selections and recommendations that are in your client's best interest. Best interest has taken on a new meaning with some of the new rules that are being passed down from Washington and from Europe. Enables you to be confident that the recommendations are based on objective third-party research that's been battle-tested in the market for over 10 years. Also enables you to be in better communication with your clients. Better client engagement is critical to building your practice, but it's time-consuming. This enables you to communicate with your clients in an efficient way by zeroing in on what's in their portfolios, as we'll see in a minute, that requires a phone call. And then finally, it enables you to be totally objective. It's fund family neutral. If you make recommendations to your clients, you can highlight the fact that this is based on third-party objective research. So let's look at 3 PortfolioWise use cases. The first one is how to replace underperforming ETFs. And to highlight that, I'm going to show you that you can import a portfolio as a CSV file. You can manually add names to an existing list, or you can create a portfolio as a watch list. That's sort of the starting point. In this case, we loaded a 10-stock, 10 ETF portfolio from WisdomTree. These are all WisdomTree ETFs. And when we did this 2 months ago, their dividend ETF, symbol DON, had a bearish power gauge rating. So when I talk about more timely targeted communications with your clients, this is an example of that. But you want to do some research first. So we drill down on DON, and we see the chart with the power gauge rating at the bottom. We also see that in this cohort of dividend ETFs, at that point in time, the WisdomTree US Mid-Cap Dividend Fund ranked only 56 out of 76 in terms of the number of stocks with bullish versus bearish power gauge ratings. Then we drill down and we see that this ETF has been underperforming the market. So it's something where we may want to find a replacement. We can look at the risk assessment, volatility, beta, AUM, and liquidity, so we get a feel for what the underlying characteristics are. And then finally, we see a number of other dividend ETFs ranked by power gauge rating. So LEAD and CDC, the Victory Shares Income Enhanced Funds, stand out with bullish ratings. And I would have loved to have used LEAD, except it's only got 34 million in AUM. So that's a non-starter, whereas CDC at that point in time had almost 600 million in AUM. And then the final piece before I want to communicate with a client is to look at the chart of CDC, get a feel for the price performance. And we see that this was a chart 2 months ago, back here in June, that had just experienced a big spike in relative performance, starting to outperform the market. So that's an example of how to find an ETF to replace one with a bearish rating, with bearish potential. Second use case I'd like to zero in on is swapping out of a mutual fund into an ETF. And really, we're talking about putting your client's interests first. There's a lot of client money that's tied up with legacy investments in mutual funds. I know 14% of you, roughly 13.8% of you said that you invest in actively managed mutual funds, and if you're finding the right ones at T. Rowe Price or Fidelity, my hat's off to you. But in general, there's a lot of client money that's in mutual funds like the Growth Fund of America, $200 billion in this fund. It's one of the funds we used when I first started out in the business in the late 1960s. And you've got a high expense ratio and inefficiencies from a tax point of view. So how do you find an ETF if a prospect owns Growth Fund of America to differentiate yourself? Well, you start out by selecting an asset class, in this case equities, which best matches that fund. And then we want to look at large cap blend ETFs because at the end of the day, Growth Fund of America is a large cap blend mutual fund. And then we want to go through this really methodical but simple process, easy to master, easy to implement, of specifying certain characteristics. We want that group rank to be positive. We want the power gauge rating to be neutral at worst and very bullish or bullish at best. We want at least $2 billion in AUM. We want daily volume of 1 million shares, and we want moderate to very high liquidity. So using those factors, we screened the equity universe down to 37 names. That included fixed income, which we're really not interested in this process. But all the factors are on the top. You can click on them to deselect it and just immediately recompute. And what we ended up with at the bottom were the 9 best rated large cap blend ETFs. And to do a comparison, we want to narrow that down to just 5. So we deselected a couple, or rather we selected these 5. And then we were able to do a side-by-side comparison of IGV, QQQ, IWF, XLC, and so forth. And then finally, to take the analysis one step further, we're zeroing in on the Russell 1000 Growth ETF from iShares, IWF. We see here on the chart that it's been outperforming the market. How do we know that? Because we've got a heat map of relative strength. We've converted relative strength to a red-green heat map to take any subjectivity out of the analysis. And then right above that is our power gauge rating for the ETF. And we see that it turned bullish in April. And again, large cap growth has been where the performance has been. And we see that in this Russell 1000 ETF. The third use case I'd like to zero in on really answers the question of enhanced client communication. How do you better and more effectively engage with your clients? Because that's really the key to referrals and to growing your AUM. Well, PortfolioWise helps you do that by generating client-ready proposals. So here's an example of that. We've created 2 portfolios. We've created a sample portfolio, which could be either a client's or a prospect's existing portfolio. And that's on the right. And to the left, we've created a sector portfolio. Remember, we're going to go back to those 11 Select Spider sector ETFs that slice and dice the Standard & Poor's 500 index into their sector components. And we're going to overweight healthcare and technology, equal weight the balance, and underweight energy and real estate, which is what the Select Grid said to do 2 months ago. And then we can see what the returns have been over the last year for that approach versus the portfolio approach. If there's something we want to share with our clients in the way of further analysis, this is what's in that report. And we break them down by the percentage of stocks with bullish versus bearish ratings. So you see a very good representation of what's in the portfolios. On the left, we see the sector portfolios weighted toward the sectors with bullish ratings, underweighted in the sectors with bearish ratings. And then we see how the sample portfolio, which includes bonds and equities on a 60-40 basis, look like. When we're ready to do a report, we can customize the report. You can create your firm logo, your contact information. You can select whether you want that to go on the report. You want to white label it. You choose which sections of the report go in there. So if the holdings aren't that important, it's the overview and the rankings and the risk factors you want to highlight to the client. And then also you have the ability to put up disclaimers on the closing page. So it's very compliance friendly. It's something that you can print out and put in a file, either electronically or into a hard copy file to satisfy various regulatory compliance regulations or the firm's clients' compliance regulations. So what we've really been looking at is a platform that's unique. It combines portfolio analysis with forward-looking intelligence. Gives you the ability to break down an ETF, to see which stocks in the ETF have bullish or bearish ratings, to constantly monitor the market by looking at the various size, style, and fixed income versus equity components. Enables you to see that very valuable sector grid, so you can do the kind of top-down analysis that my institutional clients used to do. I think if I had to characterize the big difference between what the successful institutional money managers do, the strategists at firms like UBS and Morgan Stanley and JP Morgan, they start with a top-down analysis. Portfolio-wise enables you to do that. So I'll finish with a bang. In September of 2019 at an awards dinner in New York, our ETF Power Gauge ratings won the wealthmanagement.com award for Best Industry Research Provider. We beat out Bloomberg, Morningstar, and Riskalyze. And then we rolled up those ratings and created PortfolioWise. PortfolioWise was feature complete on July 1st. So you're seeing one of the first run-throughs, one of the first webinars where we've shared a very methodical way to use PortfolioWise with advisors. And what we really have is something I love from our marketing department. Past performance is history. You've got to look to the future. So with the future in mind, we have a very special offer for those of you who've taken the time to join us this afternoon. Our PortfolioWise Elite Plan, which combines the stock module with the ETF module, normally sells for an annual subscription of $1,599. If you subscribe by Sunday, we'd like to take $600 off, reducing the cost of an annual subscription to just $999. You can go to portfoliowise.com/AP for advisor perspectives and find that the order form is populated with the discount, or you can call 877-978-6257, where Pete Carmesino, who heads up our PortfolioWise advisor team, and was an advisor himself, ran his own practice, is ready to answer any questions that you have. So with that, I'd like to thank Bob and the whole Advisor Perspectives teams. Anna, Ashley, thank you so much for all the hard work you put into making this event a success, and turn it back to Bob for some questions.
Mark, thank you very much for an excellent presentation. We're going to get to the Q&A in a second here. We have one more poll that will be on your screen now. I'm just going to put it up there and let you read it yourself. I'm not going to read it for you. Just to remind everyone, to ask a question, use the Q&A tab on your webinar console. So let's start with this one. Does the software look at all ETFs and not just those within Invesco?
Oh yeah, the software is fund family neutral. You can actually analyze a fund family like we did with Wisdom Tree or First Trust. If you've got a First Trust wholesaler coming in and you want to look at the whole First Trust universe, because we know that they're very active at visiting their advisor clients, you can analyze just the First Trust ETFs within that. But the real power in portfolio-wise is the ability to implement a fund family neutral point of view and analyze the whole ETF universe based on objective criteria.
Thank you. All right, next question. If I were to use portfolio-wise, how often, on average, would I be changing ETFs in a portfolio?
Changing ETFs is a function of a couple of variables. If the rating goes bearish, that's a clear-cut call to action. Normally, activity in a portfolio is at the advisor's discretion. This is meant to be a third-party research tool, so it doesn't have to be the be-all and end-all, although you can create your own portfolios within that. If you're creating your own portfolios, I don't think your activity level is going to be any more than it should be, because it's going to be based on objective changes in criteria or objectively analyzing a portfolio over time. Most advisors, at a minimum, use portfolio-wise once a week. Some people come every day because the dashboard is very feature-rich with actionable information or information that can inform your client conversations. But this is not meant to be a trading tool. It's meant to be a portfolio allocation and analytics tool.
Thank you. Next question. Are foreign equity and fixed income ETFs analysis available?
We do analyze foreign equity and fixed income ETFs in addition to some of the single tradables, but there we're just doing technical analysis. On the U.S. equity universe, we're rolling up those power gauge ratings to create a fundamental input into the power gauge ETF ratings.
All right. Can I look at specific ETFs and get ratings on them?
You can very definitely do that. We demonstrated within the webinar how you can look at a specific ETF. There's a 4-page research report that you can generate. Starts with a description of the fund, goes through the chart, the risk factors, and then the holdings. So you can do an in-depth analysis in seconds. I don't want to make it sound too easy. Charlie Munger, who's Warren Buffett's partner, said anybody who thinks investing is easy is an idiot. And I'm not going to pretend that this kind of decision making is easy, but we make it easier, we make it faster, we make it more efficient.
Great, thank you. What is the timeline for the forward-looking rating?
That's a really good question. The forward-looking rating has a 3 to 6 month timeline. So if you see an ETF like the QQQs or that large cap Russell ETF that we looked at, the power gauge turned bullish in March, they're still bullish. The QQQ's power gauge rating is still bullish. On the other hand, the energy ETFs, the XLE has had a bearish rating going back to, I think, December of last year. So we're now 8 months in. So the rating can go neutral, which isn't an immediate call to action. But if you've got an ETF like the energy ETF that's got a bearish rating, this suggests underperformance over the next 3 to 6 months. And that's based on how the power gauge rating for individual stocks works. That rating has a 3 to 6 month ideal time horizon. Although it's been used as the basis for annually rebalanced exchange traded funds in both large and small cap, so it stood the test of annual rebalancing. But on actively managed portfolios, both for stocks and ETFs, 3 to 6 months is the ideal time horizon.
Terrific, thank you. Next question, can I compare a portfolio to a benchmark?
You can. It starts by taking the benchmark you want to use. So if you want to use the SPY as a benchmark, you just load the symbol SPY and call it a portfolio, or you can load QQQ or IJR for the small caps. So you basically create that as a portfolio, and then you do the side-by-side comparison of whatever ETF you're looking at, which will incorporate the benchmark ETF as your reference point.
Great, thank you. Does the software create diversified portfolios?
If you can hear that, that's my timer going off. The software can create whatever you like it to create. If you wanted a concentrated portfolio of just ETF and healthcare, technology and healthcare ETFs, the screener and the portfolio comparison tools will help you do that. If you want a balanced portfolio of the best ranked fixed income and equity ETFs, it'll do that. If you want a balance between large, small, and mid, it'll do that. And that's the beauty of PortfolioWise. Not only is it objective, independent, third-party research, but it enables you to bring your biases, your beliefs, your methodology very quickly into the new world of technological tools. And I'll just quote something here, Bob, if I could. Investment News just published their annual technology survey, and more than 60% of technology spend, of the dollars spent on technology, has gone to software, tools like PortfolioWise. So the fact that people are on today's webinar reflects the interest in productivity-based software tools.
Terrific, thank you. Next question, what are the forward-looking metrics used in your ratings? Are they proprietary?
We looked at the 20 factors that go into the Power Gauge stock model. None of them are proprietary, although the weightings are what's proprietary. Of the 20 factors in the model, some have a weighting of as low as 5%, others have a weighting like free cash flow to market cap of 25%. In some of the instances, we do a unique spin on how we calculate earnings surprise. So we look at a weighting scheme that goes back over 5 quarters, because it's not just the last quarter that matters when it comes to earnings surprise. It's a pattern and a history of earnings surprise. The period that you look back to see analyst estimate changes is important. Some people look back over 1 week, some people look back over 4 weeks, other people look back over 13 weeks. So it's those little nuances that make the Power Gauge special. And then the weighting scheme, where we use both equal weighted and capitalization weighted roll-ups, that is unique, because that's a difference maker.
Thank you. When importing a portfolio, can I compare stocks, or is it just used for ETF comparison?
That's a good question, and it speaks to what's on the screen right now. The Elite Plan, which combines the $9.99 ETF package with the stock add-in, enables you to generate analytics that look at the whole portfolio. So if you're using a combination of ETFs and bottom-up stock portfolios, you can look at all of them in a holistic way. So that's really one of the key questions, because PortfolioWise speaks to the advisor who is running his practice in a holistic way. It also helps the advisor who's just looking at ETFs. But the ability to look at stocks and ETFs together is something that is unique to PortfolioWise.
Thank you. Just want to remind everyone we have a lot of questions coming in, but go ahead and ask your questions. To submit a question, use the Q&A tab on your webinar console. All right, here's the next one. Can you blend 2 benchmarks to create a benchmark?
Yes, you can. So if you brought in IJR and SPY and called that a portfolio, you could use that as a benchmark, although I'm not sure why you would want to do that. But if you've got a unique methodology that requires that, or a practice that requires that, you can definitely do it.
Good, thank you. How often would a portfolio manager be making changes to a client's portfolio, and how fast can an ETF go from bullish to bearish?
Well, we've answered the first part of that already. This is something, this is a suite of tools that does not speak to trading. It speaks to intermediate-term trends and intermediate-term outperformance. The ratings rarely, in fact, in creating the ratings, we put sort of a governor on it so that they can't go from bullish to bearish. So there's a time lag. They're more likely to go from bearish to neutral and then bullish, or bullish to neutral and then back to bullish, as was the case with the QQQs, which had been bullish leading up to the February top, turned neutral rather, because the technical trend went bearish, and then very quickly, as the technical trend regrouped ahead of other segments of the market, saw the rating turn bullish again on April 20th.
Great, thank you. Next question. Most of my clients are using actively run sector mutual funds. However, a small number also come in the door with individual equities. Do you have a pure stock analysis / recommendation, plain vanilla product?
I gave a little chuckle because obviously plain vanilla is the flavor of the day here, but the analytics tools in PortfolioWise can be used to just look at stocks and very quickly enable you to zero in. And we are coming up with a grid that will just look at stocks, because that product and that toolkit is in Chaikin Analytics, where you look at the what we call our power grid. Upper right are stocks with bullish ratings and strong industry groups. Lower left, stocks with weak ratings and weak industry groups. So the answer is sort of almost, but not quite there yet.
Great, thank you. How can I compare a client's portfolio to one of my models?
So this is really at the heart of what PortfolioWise is good at. You import the client portfolio either by hand inputting the symbols and the weights, or by taking in a CSV file, and then you have your library or stable of models. So your model could be the Wisdom Tree model or the BlackRock model, or you may have created your own model. Your firm may have a model. So that model lives in the list manager in PortfolioWise, and you can do a side-by-side comparison, look back over 1, 3, or 5 years to see how the performance of the two portfolios has been. And that assumes that they existed at the beginning of that time framework. And compute a detailed report for clients, and for yourself first, obviously, but then for a prospect or a client, of the comparison between a specific client or prospect portfolio and the model that you are favoring. You could also take an existing allocation and show your client why you've decided to change to a different model. And that's really interesting, because you can show them that if they had shifted to this model a year ago, this is the difference, and then validate and justify why you think that's a good decision to make today.
Great, thank you. I also want to mention that second polling question, I put it up briefly when we started the Q&A. It did not stay up on the screen long enough. It is back on your screen now, and answering that question will not impact your CE attendance, but we would greatly appreciate your answering it. How, go ahead, Mark.
Oh, no, I was going to say it will impact my ego, so show me some love, guys.
Well, let's go on to the next question. How do I replace an underperforming ETF?
Well, that is really simple. You zero in on the ETF through the screener, or you type in the symbol and see whether it's outperforming with a positive rating or underperforming. And then you go through a very simple screening process that we detailed to find an ETF with similar characteristics. So in the case of a healthcare ETF that has a bearish rating, and you won't find very many of them right now, you'd look for a healthcare rating with a healthcare ETF with the market capitalization characteristics. So if you want large cap, and certainly with the vaccine research that's going on, you may want to look at a multi-capitalization, blended type ETF. You then just specify the various criteria that you want in terms of liquidity, risk, power gauge rating, and size. And with a click of a button, you've got some candidates. And as Pete Carmesino has demonstrated in previous webinars, if you just very quickly scan and sort, you can sort by, say, AUM, and you see that there are some really strong performing ETFs like LEAD in the dividend category that only have 34 million in AUM. You just eliminate those. You click on the ones that you want to keep, and you then do the analytics. And within minutes, you've zeroed in on a replacement for a ETF with a bearish power gauge rating.
Great, thank you. I think we got time for maybe 2 more questions. Can I compare multiple ETFs at the same time, and can I print or save that as a PDF?
You can create a report. And Pete, I'm going to ask you to hop in here because you've been really doing this on a hands-on basis, and I don't want to misstep here.
Sorry, I was answering. What was the question again? I was answering one online here.
I will read it again, Pete. Can I compare multiple ETFs at the same time, and can I print or save that as a PDF?
Oh, yes, absolutely. So in the ETF Compare, our diagnostic tool that we've added, we've enhanced that capability to have it show at least 4 side-by-side comparisons. And yes, you can print it or save it as a PDF, and it's a great way, as Mark had mentioned, to use that as a research sort of hub for your own self to say, all right, these are the reasons why I chose this particular ETF over the other 3 in the same category. And so that's a great way to document your research as well. So yes, that can be done.
Thank you. All right, I think we have time for one more question. I've got one here that looks like a great question to end on. Mark, after you answer this, I will explain how we will handle the remainder of the questions that are in the queue that unfortunately we're not going to have time to answer. So the last question is this: can this help me understand what part of the markets are likely to outperform?
It very definitely can, and that's why we created the dashboard with the breakdown of style, sector, size rather, and category like fixed income, because the ETFs with the bullish preponderance of bullish power gauge ratings, the style ETFs, value versus growth, or large versus mid versus small, when you've got a preponderance of ETFs with bullish ratings, those are the categories that are going to outperform. And when you see a change like we have in mid-cap, where mid-cap has really come on strong, that alerts you to changing trends and therefore opportunities.
Well, thank you. And there are, unfortunately, quite a few questions that are in the queue that we're not going to have time to answer. The folks from Chaikin Analytics will respond to you individually, either via email or via the phone. At the end of this webinar, a feedback survey will appear. We gratefully appreciate your filling that out. For clarity, a rating of 10 means that you like this webinar. A rating of 1 means you did not. And thank you to Mark for an excellent presentation, and to everyone for attending. On behalf of the teams at Chaikin Analytics and everyone at Advisor Perspectives, we wish you and your families good health as we overcome the challenges posed by this crisis.